One of my businesses is a software consultancy, and about 2 months ago, we had three clients that we were helping out, and two of them actually had to travel to the United States and to go through some funding rounds to get the next round of funding, basically. And one of these clients that went to the States to get funded, they were building something that's related to blockchain, and that was really interesting for me because I've never done anything related to blockchain before. And they were taking advantage of the open protocol and how you can have like composable APIs and all that fancy stuff on using smart contracts on blockchain. When I first got to know that and started doing some development on it, I really felt like that could be the future. Nobody knows for sure, but I felt like that was, oh wow, that's really innovative and this could really work out. And if it does work out, then it seemed pretty cool. But anyways, while they were in the States trying to get funded, something really bad happened, and that's the whole FTX meltdown that happened, and all the cryptocurrency values. I mean, the cryptocurrency values have been going down before FTX, but it really just kind of tanked after FTX meltdown happened. And unfortunately, one of our clients did get funded. That wasn't blockchain related, but the other client didn't get funded, and I think they're still struggling to get funded. So that's really unfortunate. So I never really got into cryptocurrency in general because I just something about it was just not, it didn't sit right with me. Me being a very conservative investor, I just really didn't take it seriously as an asset for me to invest my hard-earned money and capital into it. So I looked into FTX, and it's a very, very classical case of somebody getting really greedy and not being able to understand risk and just kind of blowing up. So I'm just gonna summarize what the situation is, the whole thing, without going into too much detail. I'm going to keep it very high level and simple to understand. And then I'm just going to kind of go through what went wrong with this person and what you can learn from this. And so let's go through this now. So we're really talking about this guy called Samuel Bankman-Fried or whatever. Anyways, he founded two companies. So he's founded FTX. He's the CEO of FTX. Well, now he resigned, but he was. And he also founded Alameda Research. And he put like his friend, like his girlfriend or ex-girlfriend, as the CEO of Alameda Research. Right. So what went wrong with this whole thing, right? So you read about this guy all the time nowadays. He's everywhere, and it's because he's caused this FTX. His organization went bankrupt, and it's like the biggest scandalous bankruptcy in modern history. So we had the famous Enron bankruptcy that happened, and that was because they were cooking the books and they were doing some illegal stuff with the accounting. In this case, he completely ignored risk that he was involved in, and he bet too much of his money and everybody else's money who invested money into his FTX firm. So he gambled with other people's money and he blew up. He failed. So I will kind of go through how it all went down. But basically, FTX is just an exchange where people put their money, cryptocurrency into, and then people will be able to trade different cryptocurrencies. So if you have Bitcoin, you can trade it with some other coin, whatever. So here, let's just go through. I'm just going to show you the graph of how bad it is right now. So if you look at FTT dollar exchange, the more this goes up, the more valuable FTT is. FTT is the token for FTX. Now, again, I said I'm not going to go into the details too much, but basically, FTT is basically the value of the FTX organization. It's like the shares. So it goes up. The more it goes up, it's more valuable compared to the US dollars. And then just like, what is that? I don't even know what to say. Right. So this basically means they're sitting at $1.30. It basically means it's worthless. It's completely gone. It's completely worthless. And people who have money in this exchange, FTX, so you can sign up, you can register an account, and then you can transfer money from your regular bank account in dollars or British pounds, whatever. And you can buy cryptocurrencies, basically any cryptocurrency like Bitcoin, Ethereum, whatever. And then you can open up an account in FTX. Now, if you want to withdraw money out of that, you need to sell whatever you were holding, like Bitcoin or Ethereum or even FTT, their own token, and then convert that back to fiat, which is US dollars and British pounds, and then transfer that back to your regular bank account. That is, if you can withdraw money out of it. Right now, FTX went bankrupt, and people cannot withdraw their money. And towards the end of this whole meltdown, they also had a lot of cryptocurrency stolen. Like some hackers went in there and just stole money from the wallets of FTX. So people got their money stolen, and even if they have money in their account, they want to withdraw out of that, they were getting rejected. And it's just like very frustrating for everybody. One of the reasons why my client couldn't get funded is because potential investor just had tens of millions dollars worth of cryptocurrency in FTX actually, and FTX went bankrupt and he couldn't get his money out of it, so therefore there's no money to invest into my client. So a lot of people have a lot of money locked into FTX that they cannot withdraw. So what actually happened? So everybody knows that after the pandemic, there's been some inflationary kind of force that was in play in our economies, and when due to the pandemic, it's a cascade of many things that happened. During the pandemic, there was the supply chain was getting choked because businesses were not running as scheduled due to lockdowns and stuff like that. And then soon after the pandemic, the Russian war happened, and then that further choked the energy supply, which affects basically everybody. So everybody has to jack up their price now because the energy prices are high, and that in turn also inflates consumer prices, the end prices that consumers pay. So with the whole inflation going up, the Fed decided to increase the interest rates. Right? I don't necessarily agree with that move because I don't know how much of raising interest rates there is going to solve the problem of a problem that's fundamentally driven today. That's fundamentally driven by the energy supply issues. So what's increasing the interest rates going to do? I'm not too sure about that. I mean, if the inflation was caused by people, I can cover this in a different video, but if the inflation was caused by people just borrowing a lot of money and buying up a lot of assets like stocks or whatever, and just inflating, like there's a lot of money lying around in the money supply, then sure, like increasing the interest rates will, slow the money that's being injected into the money supply by means of loans and stuff like that. But this is largely due to the conflict with the energy prices going up. But anyways, when the interest rates were raised by the central banks, by the Fed in America, like Central Bank of England or Europe, everywhere, everybody's just raising the interest rates to get a hold of the control of the rising inflation. In turn, everybody started thinking like, all right, the party's over. So whoever's all the investors who were like, including institutions and regular individuals, everybody who were investing into various different assets, stock prices started coming off when the interest rates went up, and the house prices coming off a little bit because it's harder to borrow money, mortgage, so it's coming off a little bit, but not much. And then, of course, cryptocurrencies started falling down because largely a lot of individuals. There's a lot of institutional money as well, but like also a lot of retail, like individuals who got into cryptocurrency. Everybody wants to cash out their profits, right? Because interest rates are going up. It's not likely that the prices of cryptocurrencies will continue to go up because everybody's feeling like, we need to get out and get our profits. So it started coming off, and so that's where all these tokens, let's say cryptocurrencies, started coming down in prices. So their prices started coming down, and when the prices of tokens come down, it's bad news for cryptocurrency exchanges like FTX, and there's the Binance, and there's some other ones out there. FTX was definitely one of the major players and one of the biggest exchanges where you can put your money in there, like your regular fiat currency, and then start buying cryptocurrencies and do like trades and stuff like that. So it's bad news for FTX because when people lose confidence in these cryptocurrency assets, they start to withdraw money out of their investing accounts, which is FTX. So in order to save the cryptocurrency kind of, world, I read something like this Sam guy used to be known as a savior for cryptocurrency because he decided that, again, he founded Alameda Research, and his research is basically, I think it's an investment fund, basically. So they started buying up these cryptocurrencies to save them, basically. The reason why the values of these cryptocurrencies go down is because the demand has decreased because their prices came down, right? And in order to prop up the demand, you need to go out and buy them, right? Actively buy them. So that's what this guy did. So where did the money come from? In order to save multiple tokens, you need to have a lot of money. And where did all that money come from? Well, Alameda probably used up a lot of their capital, and they probably ran out of money. So they started they started injecting money from FTX into Alameda. So they injected money using the FTT token. I won't really go into the details, but probably they gave FTT token to Alameda, and then Alameda probably used so basically register those FTT tokens into their books as assets, holding assets, and then you can basically take loans from other, banks or lenders, and put that as collateral, like FTT tokens as collateral. I don't know the full details, but like that's what I'm reading and hearing from online references that I'm looking at. If that's incorrect, let me know in the comments. But like just the fact that you can take out loans from these FTT tokens that are just they were just artificially created, it just blows my mind. Like somebody who's coming from a more traditional like investment background, I didn't even know this was even possible until I looked into FTX fiasco. But just the fact that you can create these artificial assets out of thin air, and then you can go put them as collaterals and then borrow money, it's just like complete shisho, in my opinion. Like, who would ever do that? And apparently there was a lot of lenders who were willing to lend money to Alameda. But anyways, that happened. So they got a lot of capital, and they started buying up these tokens. And the tokens, if the tokens went up in value, then Alameda would be okay, because as soon as they spend money to buy up these tokens are now, they become the assets in their books. And if the prices of the assets appreciate, then Alameda would be okay. They would be in a good position, because the people who lent money to Alameda would feel easy about it. Like probably big institutions lent money to them. But if the tokens values keep going down, then the lenders are going to start questioning, like, where are you going to come up with the money to pay us back, right? So they're probably thinking, yeah, we can pay them off. Probably they pay their lenders money back in installments every month or like every quarter, whatever the arrangement is. Then they would just simply sell the tokens that they bought and then pay them off, or like come up with like some way to make money and then pay them off. But if all their assets are going down, there's no way, right? So the lenders are getting like really frustrated looking at all these tokens going down in value. And then, that's what Sam basically did. In order to fund this dangerous gamble that Alameda Research was doing, Sam kept on funding that using FTT token. And where did the FTT tokens actually come from? The value of the FTT tokens, right? Something is as valuable, only as valuable to, sorry, one second. Something's only valuable if there's a buyer who would buy with a certain price. That's the value of an asset, if there's a buyer. So FTT token, the reason why they were able to use that as collateral and borrow money is because FTT token was actively being traded in exchanges at a certain price. But that means basically there's people who are probably opening up trading accounts in FTX to buy FTT, right? I'm pretty sure you can buy FTT from like, I don't know, opening up an account in a different exchange like Binance or whatever. But probably people were opening up accounts in FTX and buying FTT, right? So there's a lot of money coming in from individual investors and other companies that are opening up accounts in FTX, and they're buying up FTT, and then FTX would just give FTT to Alameda Research, and then they would use that as collateral and borrow money. So that's the whole thing. And then when the values of these tokens kept on going down, right? People lost faith, confidence in FTT, and as you saw here, the price of it just started collapsing, and it just started going down, right? What that means is Alameda Research is completely screwed, right? Because their book value is worthless, and then FTX is also completely worthless because all their value was basically FTT was the shares of this company, and that went to nothing. And then a lot of people that had money in FTX also trying to withdraw money, and they can't, right? So that's basically what happened. And then FTX filed bankruptcy. So what can we learn from this lesson, right? When you look at this guy, how old is he? He's born in 1992. So when the financial crisis, the real estate financial crisis happened in 2008, he was 16 years old, right? So 2008 crash happened. It crashed until 2009, and it really just started recovering from 2011. So there was that like a kind of a stale period that nothing really happened. So from 16 to 19 is when the crash happened, and from 19, his age 19, he's experienced nothing but bull market. So during this time, he was in MIT, and this is probably why he never tasted or he never experienced what it's like to take on a lot of risk and you could potentially blow up when all your bets that you've been making goes against you. So there was just a sheer lack of experience, and you can see that in him when he kept on doubling down on his mistake and his bad trades, investments. If anything, he should have admitted that the fact that he's defeated. He made the bad choices. He made the bad bets, and he should have closed the positions and then stayed really lean without any kind of loans or leverage. He was really, really levered. So that's the one lesson you guys can really take away from this, is that for a lot of young people who could be watching this video, this would be probably the first time you're experiencing downturn, and it's going to happen again. We'll probably, after we get over this hump, it's going to take, they say the recession usually takes about 6 months to 2 years, and after that it will start climbing back up again, and then that we'll have a prosperity, we'll have economic expansion for about 1 year or so, 10 years or so, something like that. 10 years is like some magical interval. Again, that's so random as well. But anyways, when that happens, everybody becomes greedy, because no matter what kind of bet you're doing, whether you're betting in real estate, whether you're betting in cryptocurrency, stock market, you're just gonna crush it, right? Every dollar you invest, you're gonna have a lot of returns and you're gonna make a lot of money, and that's exactly what happened to Sam. And he was just highly levered. He borrowed so much money to invest into all these tokens that was completely beyond his capability. I think at the time when they went bankrupt, the liability to actual cash that in reserve was 10 to 1. That's crazy. So their liability in the books was 9 billion, and he had about 900 million in reserve cash. So that's way too levered, right? So in practical terms, when the economic expansion happens, it's okay to be leveraged. Borrow money, get out there, buy houses, buy stocks, do whatever you need to do, and you're going to start to make money. The more money you make, you need to start deleveraging. You need to pay back the loans. And let's say you bought a house for, let's say, 25% mortgage deposit, like down payment, and the bank is paying 75% of the house. And that's what? That's 4 to 1, so 3 to 1 leverage ratio. So every time your house price goes up by 5%, 3 to 5%, which is the average during the good economic times, your gains are amplified by times 4. So 5 times 4, so your gains are amplified. So your return on investment will be 20%, right? If the house price went up by 5%. So every single year you're going to be profiting 20%. That's a lot. And you're going to see that you're going to get richer and richer. What you do is after 3 years, 4 years, whatever, hold that property and then sell it for a high profit, and then go out and buy something cheaper with majority of the house price paid by you. So now you're covering, let's say, 50%, 75%. This is basically what I did, and this is what everybody should be doing. The more money you make, I'm not saying you should start deleveraging from like the second house immediately. It depends on how greedy you are and how far you want to test your luck. But at some point, if you made a lot of profits, you should really consider taking the profits early and deleverage on the next house. And this is really, really difficult to do. This is really difficult to do. And I'm pretty sure I'm going to be talking about this when the economy turns around and we start to see economic expansion happening again. I will warn people, and I will continue to warn people about this. Anyways, so that's the biggest lesson. And just to wrap it up, there's some stats that I'm looking at here, how serious this FTX whole fiasco is. So there's a lot of institutions and a lot of other companies that are tied up, their money's tied up with FTX. There's about 134 different affiliated companies, and the liabilities due to the FTX that went bankrupt is about estimated to be $50 billion. And just to have a reference, Enron's liability at the end when they went bankrupt was $23 billion. So this is more than twice the Enron's bankruptcy. And one of the craziest thing I found is that Canada's teacher's pension fund invested $95 million into FTX. Like, why? Why? Teachers' pension funds. These are regular people putting, setting aside their money from small teacher salary. I don't know. And then out of this fiasco, I think definitely there's going to be heavy regulations on cryptocurrency, and that just goes against what they stand for and how they started. The whole idea behind cryptocurrency was to be decentralized and have people have the freedom to transact without anybody looking over your shoulders. But now, look what happens when nothing's regulated. There will be people who take advantage of that and and becomes too greedy for themselves and then blow up, and then that explosion affects everybody's lives. Like, we're talking billions and billions of dollars millions of dollars that people cannot even withdraw, and it's their savings. So yeah, there's going to be for sure going to be regulations around this. And then cryptocurrencies is going to be another asset that people will just love to gamble, just like any other asset we have. Company shares is an asset. Government bonds is an asset. And it's just going to be another asset that's going to be regulated. And then it's just going to be another addition to people's gambling addiction. Yeah, I mean, that's about it.